S-Corp, what is that? Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale, and today we're talking about the S-Corp. It's a special type of business structure that helps you avoid double taxation. So if you're thinking about incorporating or you have an S-Corp yourself and want to learn more about what kind of structure you have, tune in and let's get started right at the beginning. S-Corp, what is that? S-Corps get their name from the subchapter S within the Internal Revenue Code about the way that they are taxed. And a key characteristic of the S-Corp is that essentially all of the net earnings of the business flow through to the shareholders without being taxed at the corporate level. This is why sometimes you've heard it be called a pass-through entity. However, you should know that S-Corps are actually liable for some tax on passive income and built-in gains. A lot of people don't know that. So going back to the flow-through aspect, essentially from the S-Corp tax return, you receive a K-1 form. This K-1 form then goes on your personal taxes, and any net income that the business generated or net loss then gets allocated and calculated within your personal tax return so that you pay personal or individual income tax rates on that income. C-Corps, by contrast, have double taxation. They pay one tax on the net income and a second tax when the shareholder receives income. Now, one other key component of S-Corps that makes it so lucrative is that it avoids self-employment tax. That is essentially Social Security and Medicare, which is roughly about 15%. Now, just because you can avoid self-employment tax on the net income does not mean you can completely avoid it altogether. You see, S-Corps have a specific rule where they're required to issue the owner a reasonable salary. And that reasonable salary is subject to self-employment tax, also known as payroll tax. But the beauty of the S-Corp is that we can essentially control how much of this tax is paid based on the reasonable salary definition. Because S-Corps are so lucrative, they have certain rules on who can own them. You must have less than 100 shareholders. Your shareholders must be U.S. citizens or resident aliens, and you can only have one class of stock. We hope you enjoyed this latest installment of What Is That? Hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.